Don Gimbel, who's the managing director of Carret Asset Management, joins us from our New York studios. And Don, just last month, you were talking about buying stocks, picking up stocks in Singapore after the government raised its economic growth forecast. What about now? We have jittery markets, of course, and now these Korean tensions and, of course, Europe's debt crisis.
Can it get any worse? I think we're at a inflection point. I think we saw it today in the New York market. I think we're seeing it around the world. We've got bad news just about every place you can look. But on the other hand, we have rising earnings. We have better economic conditions in most of the world. I think now is probably an opportune time to pick up some of the bargains that have been created over the last 2 or 3 weeks.
You know, Don, earlier I spoke to an investor who totally agrees with you.
It's trading at a PE of 9.45, estimated PE today, makes it a screaming buy for investors looking for a quick rebound. It may take another few days for this rhetoric to die down, and the markets will probably be dislocated during that time. However, there's a real rebound opportunity here in Korea.
Yeah, and Don, that was Henry Segerman, who founded the oldest Korean hedge fund, saying it's a screaming buy right now in Seoul. What do you think?
I've known that man for almost 40 years. I haven't seen him in 25. We still agree with each other. I think that markets are cyclical, economies are cyclical, and people are very emotional. And we're in a position right now where we've gone through a really serious recession all over the world, and we're starting to come out of it. We're seeing numbers come through. We've got a lot of misinformation about how bad things are, and yet there is so much money on the sidelines. I really believe that over the next month or so, you're going to start seeing things get a lot better.
Get a lot better in what sense, Don? Are we going to see more encouraging economic numbers? Are we actually going to see the markets rebound? Because some aren't calling for that until maybe the late summer months.
Yeah, I think they're being a little too pessimistic. I think you're already beginning to see, especially here in the United States, you're seeing much better economic numbers. And I think that over the next month or so, as economic numbers continue to improve, housing starts continue to improve, unemployment doesn't get any worse and maybe even starts to get a little better. As you see things in China not only not go down, but actually what you're seeing in China is a diversification of the growth, spreading out across much of China, whereas things for many years were really centered in Beijing and Shanghai and Shenzhen. You're now seeing other cities in the country really get in gear. You're seeing the standard of living continue to rise. You're seeing demand continue to rise. I think the time is really very much now for the stock market as well as the economy.
Okay. Don, nice talking to you. Thank you for that. Don Gimbel of Carret Asset Management.